All right, guys, what is going on? What is Gucci gang chat? You guys ready to learn something today? Are you guys ready to learn something today. I don't have anything planned, and dude, I am very tired. Like, I'm ready for a nap, dude. Like, straight, I had an energy drink and then coffee, and now I'm ready for a nap. That's how bad it is today. So, oh, you should get up early. You get up early, and now I'm cooked. So, I don't know, man. I don't know how good that advice is. We'll see. We'll see. What's good, Scott? Adam, slowly. Ready for some notes. Been kind of struggling these couple of days with bias. I'll go over bias then. Capitalist 2020, Roberto Julius, Nicholas, Roger, Tordy, AK, Eric. Who else is here? Who else is here? I gotta tell you, man, I didn't like a whole lot today. I was gonna scalp, and then I decided not to. It's fine, but we had some highs here that to me were just really, really clean. They're not equal. The one on the right slightly higher, but even then you have to realize that this is like a pair of equal highs to most, you know, like zone type of traders. Okay, you know, support or resistance kind of stuff. So I don't look for that specifically, but I know that other people will see that like equal highs or like resistance, right? And they're gonna want to short that, and so there's gonna be stops there. So attacking that, I think was okay, but it was not something that I traded. I definitely watched it. I was kind of like in and out of watching that and writing down notes for Slow Productivity by Cal Newport, and that was kind of fun. And then this is actually a 1-2-3 formation, shift in a stay delivery here as well, which is kind of cool. So what I'm saying is that high there, with that high there, and that high there, those three, that basically makes the 1-2-3 formation. So we have that 1-2-3 stabbing above those highs, and then let me see, 385.25. Okay, maybe we didn't. We definitely got through that here. And then 9:45, new 15-minute candle to go lower for those. But other than that, I think today's kind of whack. So I don't call it a mitigation block, but I can definitely go over mitigation, sure. So is that it for today? Mitigation and bias? Is that it? Is that all, chat? I'm trying to think of the most recent one off the top of my head. I think I mentioned this the other day. I think I mentioned this on Monday. Like I didn't trade it. I didn't think it was worth trading, but the most recent one that I can think of was that. Right, in a market that I told you on Sunday was, I'm overall bearish, and we had that high, low, higher high here, and then traded through it. So this, to me, was the mitigation, right? Support or resistance, obviously, with the bodies respecting 50%, right? We love supply and demand over here. We love that shit. So there it is. But yeah, the mitigation to go lower, this is what it looks like. High, low, higher high. And then when we trade through either that down candle here or series of down candles here, then that is going to be treated, right, as resistance to go lower. Ideally attacking some sort of low, like either these lows or these lows down here. And obviously yesterday I already talked about most of this, right? We ended up going higher instead because this whole thing ended up being a sell model. So like in the short term, it's not really a reversal, right? It's more of like a retracement for a continuation on the buy side curve of a sell model. So I know some people don't like the complicated stuff. Well, that's fine. You can simplify stuff as much as you want, but if you don't understand the complex, then you don't know what to simplify. So anybody can be a simple trader, but you're going to take simple drawdown too. And you're going to have simple RR, and you're going to struggle, and you're going to underperform. You're not going to do as well as you could if you actually grinded out some of the details, like what I help you do. So anyway, that's just a long-winded way of me saying that that's the mitigation. And it would be the inverse for the other direction. Low, high, lower low, higher high, and then the last up candle or series of up candles like that. See that? See bodies respecting that? Again, support and resistance, man. Don't you love it? Everybody loves support and resistance, right? But why can't everybody be super fucking precise? Y'all got questions? I got questions too. I know. I know. You're such an asshole, John. I'm just asking a question. But yeah, low, high, lower low. We get through it. Last up candle or series of down candles, ideally with an imbalance over it. Bang. So there's two examples right there. Tell us about your notes from slow productivity. So I don't really take like journal type notes. I don't. What I do with my books is I take literal notes, meaning like I'll underline things that I want to keep, or I'll put a bracket around an entire paragraph if it's good enough. I'll circle a word that I don't know to look up, which is happening less and less often, but it still happens. Sometimes I will write a chapter of my next book in that book because I want to reference that book in my next one. Like, oh, this is a good example I should include in my next book, so I should do that. So I'll do that. But I usually do not take what the author says and then put it into my own words for my own notes. I usually don't do that. So see, that's the thing. That's why, like me, if I handed over my binder, which I will never do to you guys anyway, it's only fragments of a lot of the books that I've read. They're just fragments, and you might find some value out of that, but the work, I guess, that you have to put in, like the time and the energy to actually read, you know, the stories, the context, like the whole train of thought throughout the book. When you miss that, you really don't learn as much as you could. So the notes to me are more so like refreshers and reminders. So that's why, like, it wouldn't be all that beneficial if I just shared, you know, notes. If that makes sense. So, yeah. When you have multiple platforms showing different market data, how do you decide which one to use? TradingView. Yes. Data directly from the source. So if I'm going to look at indices, I'm going to look at futures data or the ETFs, maybe, but that's it. Okay. CFDs are just derivatives. This is the real source. The real source. Okay. The horse's mouth is it. So hopefully that answers your question. All right, so let's go over bias then. Let us go over bias. Shit. To be honest with you, I mean, I think yesterday was a good day for bias. You know? So I guess the first thing when it comes to bias, I think is you don't always need a bias to trade. Okay? Like you don't always need a daily bias to trade. But when it comes to bias, I'm going to go to the weekly, predominantly the daily time frame. Right? That is the beginning of the top-down approach, right? Top-down. It's not down-top approach. It's top-down approach. So by starting at the top, you know, I don't know about you guys, but it's kind of like when you shower, right? I used to start with my hair, and then you work your way down. I start with my beard, work my way down, right? I don't know how you guys shower, but that's the way I've always thought of it. Because in the military, they teach you, like, when you clean the surfaces and then work your way down. But either way, you start from the top, work your way down, right? And so if we start on the daily, that's why I pointed out some things on Sunday. I said, okay, we got some lows down here, right? We have this gap. And, like, we're in here, sort of. Like, Monday's candle hasn't printed yet, so we could have went for the lows first and then maybe went back up into the gap. That could have been the thing. You know what I mean? So I don't always try to do that for you. Like, oh, we should do this and then that, or that and then this, whatever. Now, in Sunday's case, I did specifically say that we should go for these lows prior to going to all-time highs, which honestly, I mean, that was so easy, and anybody could have said that we're probably going to do that. Okay. So to me, like, all right, before we go up here to all-time highs, to me, we're going to go for those lows before we do that. So that means I'm bearish, right? So now that I'm bearish on a higher time frame, and kind of like I said too, I'm going to remain bearish until I am proven wrong. Because I can still be wrong. Okay? Despite whatever you might think. I can still be wrong. Okay? That's always on the table. If I am proven wrong, like if we traded into this gap, maybe got above it, and then treated it like a reclaimed gap to go higher, then I'd say, okay, I'm not bearish anymore. I got to switch my bias. Now I'm bullish, and then I look for longs, right? That's how that would go. Now, because that was on Sunday, and then we got Monday's candle and all that data, now that we have like Tuesday equities, okay, now we have more data to work with. Monday's high and our gap. That should become an inversion. So that's when we go down to the smaller time frames, or like I told you the day before, on Monday, I told you that the 15-minute is a good time frame to spot manipulation and to spot levels of liquidity. So all you had to do was keep the levels that I told you about on your chart. Let me go back to this for a second. We're like halfway doing a repeat of yesterday, but that's okay. It's fine. I don't have the notes in front of me. I think it was those, right? 35, 54 and a quarter, and 30, or 73.36 and a quarter, something like that, right? These lows here. So when you go to a 15-minute and you have those in the back of your mind and on the chart, now you can see Monday's high, that previous gap now becoming an inversion, a very strong reaction, right? Away from that. And by measuring, right, like having Monday's high here, having multiple pulls down here, and having that higher time frame gap here as an inversion, that's going to give you the context and the bias for lower pricing. You already had the bias on Sunday. You know what I mean? Monday may not be ideal for shorts. Doesn't mean that we're not going to go lower on Tuesday or possibly Wednesday, right? You don't have a bias on Sunday or Monday morning for the week, or, you know, just overall for the next 3 days, 5 days, whatever. And all of a sudden the market goes up, and you don't just throw the baby out with the bathwater. Okay? This isn't Planned Parenthood, dog. We're not doing that. You don't just go, all right, well, shit, I'm bearish. We went higher. I must be wrong. No. If, like I said yesterday, and I say this all the time, if we are going to go lower, we're going to go higher first. In the same manner that if we're going to go higher, we're going to go lower first. I thought that was a good one. I don't know. I've been seeing a lot of politics on my social media because all the shit that's going on right now, especially here in Texas. So, yeah, crazy. I think I'm just gonna uninstall Facebook, honestly. Bunch of retards everywhere. But that's how you do that, okay? Bias to me is not permanent. yeah, slowly. I do not have a bias 100% of the time. Just like I don't have a trade on 100% of the time. I probably wouldn't be able to do that for you anyway. Okay, like today I didn't have a bias. I wasn't bullish, I wasn't bearish, I wasn't anything. And I told you, when you do that, like when you don't have a bias at all, that a lot of the time psychologically that's actually better, because the less bias you have, the more neutral that you are, the more open you are for interpreting the candlesticks and the time and the context, of course, right? So you're essentially going, okay, it could go higher, it could go lower, I don't know. Let's wait for more information. And so all day candles are printing. All day, every day, there's a new candlestick printing, right? And so if you simply just watch it, right? We had 7:30 news, right? So we're gonna have data high and low. That both of those have already been shot, so there's nothing to do there. But you know, you could have that, and you could say, okay, now here's our open. We have a down candle that looks like a mitigation, possibly. All right, we traded through that down candle here. Now price is being sent higher. Okay, I'm not in a trade yet. This is just hypothetical. I'm not in a trade yet. You know, I wonder what's going on. What is it reaching for? And that's when you look left and go, oh shit. Well, we already had some manipulation. We're already in what manipulates typically mitigates. We already had that. We already got our shift and stay delivery, multiple, right? Okay, then this is going to be a short-term like buy model basically. So it's going to want to seek opposing liquidity. So where is that? And that's going to be like this high that's already done. It's going to be these highs in here, not done yet. And then obviously the highest one is here. And that ends up being, again, like a shitty sort of set, because it's not, they're not equal. The high on the right is slightly higher. Okay. But again, like I said earlier, if you weren't on here, even though the high on the right is slightly higher, most traders who look at these highs are still going to look at that like it's a resistance level, like it's, you know, something they want to short, right? Oh, this is a supply zone or whatever. Okay, yeah, short that bitch. Put your fucking buy stops up here. Bang, the market's going to go for that. So that's why I said, like, that can be a scalping opportunity. I like those. I don't always like them. I don't always take them. Like, I saw that today and I passed on it because I'm like, nah, I'm good. I'm good on that. Right? So even then, okay, like I said, how did we do it? This may be easier seen on a line chart because I don't know what you guys look at. I don't know, like when you see my charts, I don't know if you're looking at the wicks or the bodies or at imbalances or inversions or whatever. Like I have no idea what you look at when you look at my charts. Okay? Because we're all different. But what I'm trying to point out to you, let's go back to the candlesticks for a minute. When I tell you that we have a 1, 2, 3 formation, when it's obvious with the wicks, that's fine. But what I think you should do is look at both. You should look at both. So like, for example, higher wick there. That's the wrong shit. I can't even see that. It's that one right there. Right? Because the market traded higher, has a wick here, and then we trade lower. So that's a short-term high. It's a 5-minute chart. On a 1 minute, that'll be like a obvious high, right? Then we get another rally here with a retracement. So that's that second high. And then the last one, obviously, is one of those 2 wicks. And that is your 1, 2, 3 formation. But what I'm also telling you to look at is the bodies. Okay, so like body there, body here, body there. And again, that is easily seen on a line chart. You see how easier that is to see on a line chart than it is to the candlesticks? Because again, the candlesticks have both bodies and wicks. And we spend a lot of time on candlestick charts to see, you know, the smart money concepts and the time and the price and all this shit. But when you look at a line chart, there's really nothing to see except for the close. And it's just a line from close to close to close to close. So it's much easier to see it like this. Like, oh yeah, body and then body and then body. So the fact that we get that, right? We get that 1, 2, 3 formation attacking those highs. See how that one's higher here? Yeah. By doing that, that in itself is manipulation. I think it's called the 3 drives pattern in the Street Smarts book from Larry Connors and Linda Rasch. I think they call it like the 3 drives pattern or the 3 little Indians or some bullshit. And that's kind of like, I guess like visually, the reason why price does that is they're trying to get short sellers knocked out of the market. Like they drive it, trying to get shorts out. You know, get them in, stop them out. Get them in, stop them out. So then once everybody gets knocked out, okay, now we can take it lower. To me, it's just a different form of manipulation. Because, like, if we go back to yesterday for a second, the manipulation that I prefer is like this. I prefer something fast and leave. Even if this was an up close candle, that's fine. It does not have to be a down close candle to understand manipulation. Okay, whether it's a up close or a down close, it doesn't matter. When it leaves a long wick like that, hitting a higher time frame objective that you pointed out days prior to, right? There's that reacting again, right? Predicting versus reacting, right? So that is what I like to see. the sort of like Muhammad Ali jabs. Like, okay, we got one here. Okay, we got one here. Okay, we got one here. It's slow and lethargic, and it just grinds down people's patience. I mean, mine too. You know, I'm not the most patient person, but like, it's just time-wise, it's so slow in doing it. But same thing. The 15-minute is a wonderful time frame to spot manipulation. And look at that candle here, right? Reached up that third time, attacking that, could have ran into something over here, or maybe something on an look at your own chart. And then bang, 9:30, new 30-minute candle, new 15-minute candle, shorting above the open to go lower. So this is my least favorite like reversal pattern, you know, the 1, 2, 3, and then okay, now we go lower. And we have not spent, we have, like, price did not dig below these lows. It sort of just like tapped into it, like right here, just kind of like give a little kiss right here. But it needs to like actually seek depth here, in my opinion. So NQ, similar story. These highs here, right? This was the final hours, I believe, the final hour like / PM high. Let me just make sure you guys can see that, this one. And then this one, the high on the right is slightly lower. These lows swept, V-shaped reversal, right? C8 logo reversal. We're getting rid of the V-shape. We're going with C8, okay? C8 reversal. Same thing. What manipulates typically mitigates, and you see it attacking those highs. But again, 15-minute I think is great, but even on the 5-minute, stabs up, lower, stabs up, lower, stabs up, lower, and then even here was lower at a certain point, and then it stabs up like one more time. Then see that up candle here, change in state delivery here, and then bang. So arguably, I think NQ had pretty clean shorts over ES, in my opinion, for that. So, and then you see how we have no imbalances in here? We have no imbalance here. We have none in here. We have none in here. This is all, that was all delivered. I mean, on the upside, it was delivered like shit. It's like a high resistant run on liquidity, because it's like back and forth, back and forth, back and forth. But if there's no imbalances in here that should be bullish, if there's nothing that's going to stop price, like to send it higher, then this is what happens. It's not going to seek an imbalance because there isn't one. So if price only trades to two things, liquidity and inefficiency, if there's no inefficiency, what's it going to reach for? Liquidity. So prior to this run higher, where's the liquidity? You do have this low here, you could say, and then you have that one, and then you have equities open low here. And you see how easily it gets to that? It doesn't spend a lot of time. There's a couple candles in here, but it doesn't spend a lot of time. It just almost prints entirely down candles to seek that opposing liquidity. So again, that's not my favorite reversal, but that is a common reversal. The 1, 2, 3 formations. And they're not always this close together. Sometimes they can be sort of apart, you could say. I'm trying to use my words carefully. Like you could have a low here, a bunch of candles, and then maybe another low, and then a bunch of candles, and then another low. Like that would work as well. They don't always have to be sort of a can of sardine together like that. They can be apart or super close together. So maybe that's why some people get confused or have trouble with that. Thought the bar chart was coming out for a second. Dude, don't make me whip it out, man. I'll whip it out. I'll whip it out. Don't be playing with the bar chart, dog. Y'all are lucky, man. They didn't really have candlesticks for a long time. Okay, they had bar charts, broski. You're gonna see the same thing, right? Open high, and then lower and close. Next candle entry, shorting above the open. Bang. It's the same shit. It's the same shit. It's just, do you want to see bodies, or do you want to see that? Bar charts are not always sexy, but I'll tell you this though. Bar charts are really wonderful for like illustration purposes, because now you're forced to look at it, because you can't see candlestick, you can't see bodies, and it's a little bit harder to distinguish like what the up and down candles are unless you like look at each one specifically. But when you get to these highs here, it makes a lot more sense, doesn't it? Like when you see candles like that, doesn't it make a lot more sense visually? Oh yeah, open high and then slammed lower. That's manipulation. Okay, if you're not in on that, that's fine. You can enter right at 9:45, expect drawdown, but you could enter, you could just wait for 9:45. As soon as 9:45 hits, bang, short it, stop at the high. First pull liquidities here. That's not going to be a great RR. That's probably going to be less than a 1-to-1. But then, like I said, equities is down here. That's probably going to give you something closer to a 1-to-2. London's low, maybe pre-market low. That hasn't been met yet. That's fixing to get wrecked here in a couple seconds. That should be very obvious by now. But again, it's just like visually, that's sexy to look at. Because once you understand that, right, then that's what you see on the candlestick side, and you won't second guess this stuff. You know, you won't second guess it. I mean, you might. I don't know. I guess speak on your behalf, but to me, you shouldn't be second guessing it anymore. You've had enough experience to understand that this is what markets do. They seek liquidity and inefficiency. Okay? And once inefficiencies are disrespected, they flip on you, man. Kind of like, you know, your childhood friends, you know, they fucking flip on your ass. Boom. Bullish, ripped ass, bearish. Look at that. Don't you love supply and demand, baby? Look at that supply zone right there, dog. Sheesh. Right, all the sellers came in right there, huh? What support level is that? What support level is that? It's not. It is it's an algorithmic concept, because it's an imbalance that was once bullish and it ain't bullish anymore. Even here, right? Look at the supply and demand on that shit. We just so happen to trade to the upper end, pass 1 or 2 ticks, and then slam lower, right? That's real fucking resistance right there. How can you not love this shit, man? How can you not look at this and just like, you know how many times I've had to pick my jaw up off the floor when I first started learning this stuff? When I first started trading like this, bro, it's fucking nasty. Nasty, bro. And it just makes you feel, wow, I don't know how it made you feel, but it made me feel like shit. I'm like, damn, dude. I spent so many time, sorry, I'm so tired. I spent so much time, years, you know, looking for the right RSI settings and, you know, bats and whales and whatever, patterns, A, B, C, D, X, Y, Z and shit. And then you look at this stuff and you go, oh man, the precision was here the whole time. I just couldn't see it. I could see it. I could see the candlesticks, but I did not know that there was precision let me back up. The first time I was actually able to start seeing a high level of precision, I went, wow, this is fucking crazy. And then what really like changed the game for me was understanding that all of this is precise. It manipulates on purpose. There's time-based entries in here. That's precision. That's precision. There's probably some 1 minute stuff in here that maybe I'm not aware of. But like, there's a reason that that's the high. There's a reason that this is a high. There's a reason that this is a high. There's a reason that that's a high. And like, there's a reason that there's like time-based shit in here too. And when you really look at that and you finally see it, just like yesterday, dude, I'm telling you, it's like Trinity getting above the clouds in the Matrix. You see the light and you go, oh my shit, Snane. I've been bullshitting around. But now I see it. You'll eventually come to light. I said that on my Instagram story like earlier this year. I was like, you're eventually going to bend the knee. You will bend the knee. If you watch me enough, you have no choice but to bend the knee. You will. You will absolutely 100% submit to the idea that the markets are controlled and that they're ran by an algorithm. Not 100%. There's, of course, manual intervention. There's manual manipulation. Yes. Most machines have some level of human oversight. I can't really think of like a machine that doesn't have any human oversight to it. Even AI like has human oversight. You know what I mean? So why wouldn't the markets have human oversight? So anyway, sorry. I didn't really mean to go off on a wild tangent. I usually do, but it's not always planned. Oh, it was Cameron's fault, right? We went over the bar chart. Yeah, and you can blame Cameron for that. How do you know that's not a reversal to just retrace on a higher time frame? Like, why would we take out London's low today if we are overall we're not bullish? Especially with that happen yesterday, taking out a higher time frame. I'm not bullish on a higher time frame. I told you I was bearish on a higher time frame. You don't have to apologize for being a noob. You don't have to apologize for that. Okay? If we go, I guess if we let's go back for a second. You said you're a beginner or a noob, right? Let's go back for a second. If you think about first principles, okay? There's a few really good first principles. And one of them is to think in terms of probabilities, not absolutes. So really, nothing is guaranteed. The only thing that I can guarantee is that you will take a losing trade at one point, okay? I'm not going to promise you're going to take winning trades. I will promise you'll take a losing trade. And that's the extent of what I can guarantee you, period. Okay? When it comes to having a bias, when it comes to, you know, getting in sync with price delivery, and wow, we're not going to swipe the lows. That's crazy. Yeah. See, I don't always get it right. You have to keep in mind, if you are wrong, you don't want to be wrong by a lot. So no matter if our win rate is 60%, 70%, 80%, even then you still do not over leverage. You know what I'm saying? So if you keep those two things in the back of your mind at all times, number one, you could be wrong. Okay? Probability is not absolutes. And number two, always manage the risk, because you never know which trade is going to be a winner and which one's going to be a loser. You just don't really know. You can always have that feeling like, oh yeah, this might be a winner and probably will be or whatever. But until you really know what you're doing, and even then, nothing's 100%. So what we are doing, the reason that I go over all these details with you, and this is what you should be doing on your own, but the reason I go over these details with you is, whether it be on NQ or ES or whatever, Dow Jones is ass, so don't even bother with that. Right? More personal opinion for you. This is why I show you certain things, because models pan out in order. Okay? The models always pan out in order. It can't go out of order. Manipulation always, this is a turtle soup, by the way. So we have manipulation, turtle soup, that always sets the low, or it always sets the high. The only exception is relative strength analysis. Maybe ES goes 3 times higher, and NQ makes a high, and then a lower high, and then a lower high. That's the only exception. All right. So outside of that, manipulation will always set the low. And then we're going to get a shift in a state of delivery. That's going to be the last imbalance on the way lower that gets traded through. That is a shift in a state of delivery. It's not always the last down candles. It can be the last imbalance too. There's at least 2 different ways to look for a shift in a state of delivery. That's why when people say, oh, this is my CISD model, and it's like, oh, well, my entry was here. Well, why the fuck was it up there? It could have been down here. Oh, well, no, that's not this and that. Yeah, it is. You're just fucking stupid. So, anyway. Sorry, I told you I was tired. Leave me alone. Last imbalance on the way lower. That's an inversion. Not really the Judas model here, but it's close. Down candles here. Shift in state delivery. Right there. Right? If that is manipulation, we have some up candles here. Right? So if we get through that, that's probably going to be utilized to go higher. Then we get that. Then we get another shift in state delivery. Then we get a return to it right there. So the Y-Slime model is there. We could say the Judas model is here. The inversion model is here. That's 3 different models for you right there. The mitigation model, that's 4. There's a gap right there. That could be another model for you. That's 5. Shift in state delivery, bang, that's 6. So that's at least 6 different opportunities to go higher, right? And then you're going to have this level of distribution that becomes accumulation on that side. So this could be a late add-on as well here, right? So it's like 7. That's at least 7 down candle here. That could be 8. There's at least 8 opportunities in this price run higher, okay? And this is how the markets work. So they give you the manipulation, then they give you the low risk buy, then they give you the first leg, and then the second leg. It doesn't go out of order. Never. It will never go out of order. That's something that you can rely on. 100%. Oh, look at that. You fuck. ES did go deeper here for that. And then NQ was like, nope, I ain't doing it. Fucking, what a dirty dog. What a dirty dog, dude. All right, anyway. Let's go to NQ, because, and to me, again, NQ had better shorts. To me. So, the reversal, the Y-Slime model, that's 1. Shift in state delivery, that's 2. The 9:45 new 15-minute candle, that's a time-based entry. That could be 3. Maybe you're a couple minutes late. Maybe you see something on a 1-minute time frame. That's, a little bit later. Inversion here, that's 5. The later inversion, that's 6. That's at least 6 different opportunities to go lower for these lows down here. It hasn't done it, but again, we're studying price here. So think about that. Think about this for a second. There was 8 opportunities to long. There was 6 opportunities to short. I don't know about you, but that's like 14 different trades right there. 14 different trades. You only need 1 or 2 good trades a week. There's fucking 14 right there. Think about that. Again, a lot of people aren't going to show you this. A lot of people aren't going to count all these trades for you like, oh, this was there, this was there, this was there, this was there. This is the kind of stuff you need to do on your own, folks. Now, I will do it for you because I'm your mentor and I'll teach you stuff, of course. But like, in my opinion, I really should not have to show you something like 3 or 4 times. I should show you something once or maybe twice, and then it should be self-discovery beyond that. Because you can take what I've given you and really run with it, right? What do they call that race with the baton? You know what I'm talking about? Like they're running and they hand the baton off and the person like reaches back for it and keeps going. Like that's, oh, relay, thank you. Right. So think of it like a relay. and I'm running. You'll never see that. But just imagine that I'm like sprinting, and then I'm handing you the baton, and I'm going, look, you've got this, you've got that, you've got this, you got bang, 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 bang. You got over here, you got boom, 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 boom. It's up to you to go, okay, is this bullshit or does this work? And that's for you to decide. You know? I mean, I don't know how many trades I got to show you. I don't know how many times I got to call price for you. I don't know how many funded certificates you need to fucking see. I don't know how much evidence you need. Okay? But it's there. The precision is here. The details are there, but you have to dive into it. Your studies cannot just be going onto my YouTube channel or like my live streams and just hoping that you're going to get it all. I'm going to give it to you, of course. But again, you need to solidify what you know or what you think you know. Because some of you think you know shit and you don't. Okay? And solidify that through your results and through price action. Price action will teach you more than anybody, even myself. So I don't know how we got here, but it's all about probabilities, not absolutes. And when you have a framework, when you have opposing liquidity, when you have higher time frame bias backing you up, when you've got small time frame and high time frame in alignment, your probabilities are stacked. It will never be perfect. You won't have a 100% strike rate. But as long as you have a good RR and a good win rate, you'll be all right. Do you have any time-based videos to study? I may find it eventually. Slowly digesting now. I don't know, Chad. I don't actually know. Do I have any specific videos on time? I think, yeah, there should be a video on the time compression matrix. I really haven't brought that out in a minute. But basically, every model that you know of, you can actually double it because you may not take the model, but you could take the candle or the next candle after that. So you can always, like, if you only know of 3 models, you actually have 6 because you have those 3 individually, and then you have like a candle or 2 after that model prints to get a later entry. Does that make sense? So nobody ever has just one model. That's impossible. So, yeah. If I'm going to take a time-based entry, for me personally, it needs to be on an hourly, maybe a 15-minute. I usually would not go below that. Not usually. Like, say, for example, what time is it right now? It's 12:56. I almost would never take a trade right at 12:56. Why would I do that? Like, let's say we have a divergence here, for example. Okay, ES took the low, NQ didn't. All right, well, if NQ is bullish, that's fine. But I'm going to wait until 1 o'clock. If I'm not already in, of course. I'm going to wait until 1, right? Because if we are bullish, we're going to have 1 o'clock, and it's usually going to trade below its 1 o'clock open. We could have a down candle or something, or maybe like an imbalance on a smaller time frame, right? Suspension here. So instead of buying it now, instead of trying to chase it now, which I don't suggest doing, I'd rather wait. Okay, wait for 1 o'clock, let it trade a little bit lower, and then you could, get in, or maybe if it takes that low, you could get in there and then go. You see what I'm saying? So I don't really think you need like a whole series on time-based entries. It's just waiting for the higher time frame. On an intraday basis, that's going to be the 15-minute and the hourly. You can always wait for a new 5-minute candle, sure. But Yeah. Usually the higher time frame, the more important. So hopefully that helps. But I don't think anything of the SpaceX IPO. I'm not part of it. I'm probably not going to be part of it. I don't really care about it. G, don't ask me about the 30-minute. Don't ask me about no punk ass 30-minute time frame. But to be fair, the 30-minute time frame is a new 30-minute candle is also a new 15-minute candle. It's also a new 5-minute candle and a new 1-minute candle. So yeah, that's why time-based entries work so well. Even though a lot of people won't do it. People are too busy looking at concepts, which is it's not bad per se, but you can get a later entry and still take less drawdown. All right, slowly. You're on thin ice there, buddy. You're on thin ice there, buddy. You can execute on whatever time frame you'd like. But if it's a time-based entry, then what's the point of going down to a 1-minute time frame? I don't know. Listen, it's your trading, it's your career. You do whatever you like. But that, I think, is going to wrap it up. If you guys don't have anything else, we covered bias, right? Start with the higher time frame. But remember, it's never guaranteed. You know, you have to look for signatures. You have to look for probabilities. Now it's 1 o'clock, so now we should see some sort of down candle start to form. Once in a while, you'll get a candle that doesn't have a wick, sure. But I'd say 99% of the time, 98% of the time, it's going to print below its hourly open. And if you want to just stick to the 15, you could. You could say, all right, well, fuck it. I'll put a long. Don't do this, by the way. This is just a teaching moment, okay? You could just put a buy at the hourly opening price. Stop at the low if you think that we're not going to take that low and that this is an actual divergence instead. And then, you know, if you want to target a 1-to-1, you go there. If you want to target a 1-to-2, you go there. And then that's it. But see, I'll leave it here for like a minute or two, just so I can show you my point. Bang. That you would be entering on. See how we dip below hourly open? Wow. Crazy phenomenon. Crazy. But again, if you're going to trade right at the open of the hour, again, expect drawdown. Don't expect to be like wick entry and then 1 minute later you're in profit. Don't expect that. If it's a higher time frame, it's going to need that fluctuation. It has to print that lower wick if it is in fact bullish. So that's it. Seriously. There's no concept here. There's no anything. It's just waiting for one, buying at the open, technically, not even below it, buying at the open, and then that's it. I don't think it's the greatest way to trade, but it is a way to get in sync with price delivery as long as you're on side. So it's not super sexy, but good trading is good trading. What do you want from me? Do you want to be a sniper and show off and, you know, do all that stuff? Do you want to trade for social media? Or like, do you want to trade, you know? So that I will let you decide. But all right, there's no more questions, and that will be it. So y'all be good, be blessed. I usually don't take naps, man, but I feel like a nap coming on, man. I feel like it's nap time, chat. I'll put out a market view tomorrow on Thursday. I will see the members here on Friday the 12th for our next member-only live stream. And for all the freebies, I will see you guys on Monday the 15th. So have a good weekend. Make sure to read The 48 Laws of Power by Robert Greene. That's still book of the month. And yeah. So I'll see ya when I see ya.
Sometimes it feels so strong. It's going down. Sometimes it feels so fun.